Welcome. We're just waiting for a few other individuals to go ahead and join us. So give us just maybe another minute and we'll go ahead and start the webinar. All right, yep, here we go. Just a moment. We just had 15 other people join us in the last 15 seconds. So give us just a moment. All right. Well, I'll tell you what, we're going to go ahead and start while others still join us. So let me go ahead and first and foremost, let me welcome everybody and thank you all for joining us to Originate More. This is American Heritage Lending's signature webinar series. We're expecting a pretty large group, so as we continue on, we'll let others join us. But we are excited to start this. This is our 9th webinar series. And today we're going to spotlight the 5 to 10 unit investment property space. I'm Tony Gast. I'm here, the marketing manager at American Heritage Lending, and I'll be the monitor for today's discussion. Joining us, as you see on here, is Dan Mahoney and Jackie Wee. Dan is our area sales manager, and Jackie is our executive vice president of operations for our TPO division. They both bring years of experience and insight to this industry, and they're going to be able to break down everything you need to know about the 5 to 10 market. But before we dive in, I just have a couple housekeeping items I always like to address to make sure you understand this is definitely an open discussion as well. So we encourage you to participate. You can use the chat box and to answer your questions at any time. We'll answer those questions as we go throughout the presentation, but we'll also have a Q&A time set aside at the end of this to go ahead and discuss any questions that haven't been addressed as of yet. And of course, it is being recorded. So upon the completion of today's webinar, you will receive an email with a link to the recording. And then by the end of the day, we'll have that link to the recording as well as a copy of this PowerPoint presentation that Dan will be going through. That will be on our website under our resource tab. And that's at www.ahlend.com, along with all of our previous webinar content. So with that being said, I'm going to go ahead and turn this over to Dan. Go ahead and take it away, sir.
Good morning, good afternoon, everybody. My name is Dan Mahoney. I'm an area sales manager here at American Heritage Lending. I like to joke that I've been in the business so long. I started when I was skinny and had some hair. Yeah, I've got a lot of experience. We are a non-QM only lender here at American Heritage Lending. So our underwriters only underwrite non-QM, so you won't have an FHA underwriter underwriting a bank statement loan. Makes a big difference in today's marketplace when you have a non-QM lender that's dedicated solely to non-QM. And I think that makes a big difference when you see underwriting approvals here. With me is Jackie Wee. Jackie's our EVP of TPO operations and a very classy lady, and love working with her. So you want to say hello, Jackie?
Hello, welcome to the webinar.
We rolled out the 5 to 10 unit program about a month and a half ago, and it has taken off. The marketplace for this was not as busy as, it's a lot busier than we expected. So we wanted to address a bunch of things here with that program and teach you all about it. 5 to 10 unit is for DSCR only. We do not ask for tax returns or income or anything from the borrower. We ask for, and then we'll go over it, but we ask for, it is a DSCR only program. For 5 to 10 units, it's not for 11 units or 12 units or 22, as I got asked this morning. It is for 5 to 10 only. 5 to 10 units are, as the slide says, 22% of the US rental market. Multifamily added 3.5 million rental units in between 2010 and 2022, midsize included. The occupancy level of these properties is at a 97.2. That's from Q1 2025, outperforming broader multifamily. And where I am in the Boston marketplace, it's probably actually a little bit higher because they're building so many rental units right now. We can't keep up with the demand. Average small multifamily LTV on the 5 to 10 unit. The average LTV is 63.3. So there's usually a lot of equity in these properties as well. So on the small multifamily, on the loan size 1 to 9 million, we averaged in 2024 56.8 billion in the marketplace in originations. The average loan size typically is 1 million plus. We're seeing this to be very true. On our average 5 to 10 unit is a little bit over $1 million just in my pipeline, and the cap rate is 6%, which is a stable capitalization rate on multifamily marketing, and they usually have very strong cash flow. Who are the investors? Who are the buyers? Who are the owners? The typical on a purchase, somebody that already owns a 2+ unit for a rental as well as their primary, and they're expanding. So they'll go from a 2 unit or a 3 unit up to 5 to 10 units. We're seeing 1031 exchanges. I closed one in Connecticut last month that we did it in 9 business days. We see small partnerships because we will close in an LLC. When we close in an LLC, we do not report the mortgage to the borrower's personal credit report. That's always a question I get asked. I'd like to address that up front. Unless they're late. If they are late, 30 days plus, we will report that to the credit report. But other than that, we will not report those to the personal credit report. And family offices as well is who are seeing these buyers.
Question. Somebody had asked, just maybe want to address up front, is there any age limitation to the property?
So there is no age limitation to the property, but when we see a property that's more than 100 years old, we're going to want a basement foundation inspection. So that can be done by a regular home inspector. We're not asking for engineering reports. We're asking for a home inspector to take pictures of the foundation to make sure that it's okay.
Thank you so much.
Sure. Please keep asking questions. Where can you find multifamily properties? So we can see them on MLS, regular MLS under the commercial section of the multifamily section. We're seeing on LoopNet. LoopNet's a great website. LoopNet and the sister website to LoopNet is another one called CoStar, COSTAR. I think both owned by the same company. This is a great marketplace for, and make sure it's like MLS or Zillow or anything like that, that you toggle for sale, not for lease, because you won't see any of them. So it's a leading online marketplace for commercial real estate, including commercial, because a lot of people determine that 5 to 10 unit is listed under commercial and not under residential, because residential is mostly 1 to 4 units. Commercial information exchanges functions like an MLS, but it's for commercial properties. It's regionally focused. It's residential MLS and RPR. And Reonomy site, commercial listing platforms exchange both on and off market and off market multifamily opportunities, and may provide actionable owner and broker contact data. Off market networking strategies. We're seeing a lot of these in the REI meetups, the different Facebook groups, off-market properties that we'll see, like where I live in Massachusetts, you'll see Massachusetts offline marketing opportunities, offline real estate opportunities, and I'm seeing 5 to 10 units in there as well. You can leverage the real estate investment groups like the REI meetup, Bigger Pockets, and Facebook groups, like I just said, to uncover these off-market deals and grow credibility. The other is direction from recent buyers. Using personal and professional networks that loan officers have, you can uncover hidden opportunities from platforms to real estate events or online communities like Nextdoor and Bigger Pockets are very powerful sources for these properties.
And I have another couple questions, if you don't mind, I'll answer you.
Go ahead. No, go right ahead.
One in particular says, would a AHL consider a stretch to 12 units if it's 100% leased, DSCR of over 1.2?
No. Right now we are limited to 10 units, so we would not stretch to 12. Sorry.
Okay, thank you. Let's see. Another question was similar as well, was saying any wiggle room on multi-unit rental experience. Most clients I come across have multiple SFR rentals.
So the short answer there is yes. We can consider those for an exception based on the strength of the borrower and their experience as a landlord. Certainly, if you have a borrower that has a larger rental portfolio, 10 units or the like, you know, that's some pretty substantial experience. So we would definitely look at that. The borrower that just has one single family residence as an investment property, probably not. But somebody with multiple investment properties, we would consider.
And I'd like to back up the reason why that, and I think I know who asked that question, but I'd like to back up why that question was asked. So part of our underwriting guidelines are the borrower must own their primary residence as well as a 2+ unit investment property. So they have to have landlord experience. If they own one condo or one single family residence, the borrower doesn't qualify for this program. So that's just an underwriting guideline, and that's the reason why that question was asked. It's just to give people a background why.
All right, perfect. Some feedback we have was perfect, great, thank you. We just closed a 6th unit with you, great experience. So thank you for that, same individual. Someone real quickly on the previous slide was asking the other sites. If you could go back up besides LoopNet that was mentioned. Now again, we'll share this with you, but just if you want to reference that really quickly. Lending others residential. Okay, that was the slide I think they were inquiring about, to see if there's other sites besides that you had just mentioned.
No, so the other website I talked about was that's not listed on this is called CoStar, COSTAR. And I'm from Boston, so we don't pronounce our R's as well. So it's not CoStar, it's CoStar.
Spell that one more time with your accent, sir.
Yeah, so so it's COSTAR.com is another commercial property free website.
Thank you so much. And one of the questions that they were asking, let's see, is how about a foreign client that has multiple investment properties and no primary?
So for today, we don't, foreign nationals are not allowed on this program. It's US citizens only. We have made exceptions for permanent residents, but not foreign nationals at this time.
Okay, let's see here really quickly.
Loving the questions, very smart questions.
Yes, let's see here. Do all units have to be attached, or can it be multiple duplex on one lot?
We will accept multiple duplex on one lot. So the biggest challenge you have there is the appraiser being able to comp out that property, but yes, we would accept that.
Okay, nice to know. Thank you so much.
And I'll chime in on that as well. We have to make sure that each unit in those buildings is a minimum of 500 square feet.
Okay, good to know. Thank you. And this is a valid question as well. They're asking is how long we've been doing this program, and approximately how many have we closed?
We've been doing the program for about a month and a half, maybe 2 months now. But that's the thing is, you know, we're new to the 5 to 10, but we're not new to it. And the reason I say that is we close hundreds of DSCR loans a month. And there's not a big difference. There's maybe 6 or 7 differences between a 1 to 4 unit DSCR and a 5 to 10 unit DSCR. We have different appraisal. We have a 71A or a narrative appraisal. We have a minimum DSCR ratio of 1.1. Our loan sizes are on this one go up to 2 million, 75, and we'll talk about the guidelines, but really the same theory between a DSCR 4 unit and a DSCR 7 unit is exactly the same. It's just a little bit, the property's different. So to say we're new to the 5 to 10, yes. Are we new to DSCR? No. It's 70% of 75% of our business, and we've been doing heavy volume for the last 3 years.
Thank you. Let's see, we have some other questions. You want me to go ahead and ask this as we go along?
A lot of these.
Perfect. Here is what we might have addressed this, but I don't think so. Is what is the required occupancy rate?
So on the occupancy rate on a purchase is 0. So say it's a brand new building and then it's selling it rent free, but it's not occupied yet, it can be 0. On a refinance, we're maxed at 1 unit vacant.
Max is 1 unit?
Vacant, yes.
Perfect, thank you so much. And how about this question here? Let's see here. Oh, going back to the foreign national topic and so forth, it says DACA, DACA. DACA and clients qualify, or only US citizens or green card holders?
Only US citizens, and green card holders are actually an exception. So the program is US citizens, and then, we'll make exceptions where they make sense. But we will not do foreign nationals or DACA borrowers.
Okay, thank you so much. Let's see. One of them had also says, can the property be for sale?
Preferably no.
No, we're not going to do a property that's for sale to a refinance on a property for sale. Maybe we'd look at it an exception basis on a rate term, but not on a cash out.
Okay,
Same guideline for the regular DSCR program.
so they were just verifying back previously to that. It says, so permanent resident who holds a green card is not eligible.
Not per our guidelines. However, we will look at that and make an exception. If the loan makes sense and the borrower is strong, we'll make an exception on that.
Okay, that makes sense. Thank you. Let's see here. That's what they're asking as well, is what is the exception given to allow a green card? Is there something specific you could share, or is it a?
No, it has to do with the borrower themselves. So is it a refinance where they've had the property a long time and they've established credit depth? Yeah, I would take a look at that one. Do they own multiple multifamily investment properties? We'll take a look at that. High credit score, lower LTV. We just want to close make sense loans. So if the loan makes sense and the only strike against the borrower is the citizenship, we'll definitely take a look at that to make the exception.
Okay, thank you. Let's see, here's an interesting question is, will you use market rate rents for the DSCR calculation if rents are currently below market and if the market rents are supported by the appraisal?
On this program, go ahead, Jackie.
Yes, so we're actually not doing it on this program right now. So we're using actual lease amounts. On our standard DSCR program, we do allow for that, just not on the 5 to 10 units yet.
Okay, thank you. What are the max broker points we can charge on these DSCR products in region that we lend in? It's asking.
3 points.
Let's see, is the question here is the 5 to 10 unit DSCR only for expert investors, or is it any new investor can do?
So the borrower can't be a first-time investor on this program. The borrower must own their primary residence as well as a minimum of a 2+ unit property. If they own, as Jackie said earlier, 10+ single families or 10+ condos or townhouses or something like that, we'll definitely take a look at that as an exception. But the current guideline is the borrower must own at least a 2-unit investment property.
Okay, and as you said, it's a primary?
In a primary, yes.
Thank you so much. Let's see. Do you have licensing requirements for brokers, or can we submit loans in any state you operate in?
So we have what we call a commercial broker program. So there's no NMLS needed. It's usually you have the LLC that you submit the loan to us under your LLC. And I want to say it's 40 states you're allowed to do these loans in without a license.
Okay, thank you so much.
And if you want to reach out to us, we literally have a diagram, a graphic, those states where you can do them.
Okay, let's see this one. I'm going back to the number it says on a, So on a purchase 6 unit, 3 are rented, 3 are not. You would use the 3 leases and then the 3 market rents for vacant.
Exactly.
You would not use the
Yes.
lower 2.
Yes, we would use the 3 leases as long as the purchase agreement suggests that the leases will be transferred to the purchaser of the property, and then we can use 1007 rents or actually the rents, anticipated rents for the 3 vacant properties or units.
Okay, let's see here, minimum credit score. Also on the interest rate, is that based on the DSCR ratio?
So the minimum ratio on this program is 1.1. If you have anything hot, I'm sorry, 1.1. So it's 1.1 or above. There is no special pricing for the higher ratios. Like a lot of times, like on a DSCR, on a regular 1 to 4 unit, if you're over 1.25, it improves pricing. It doesn't on this situation, even though we have very aggressive pricing, even at the 1.1. What was the What was the other part of that question?
Let's see here, minimum credit score,
Minimum credit score on this program is 680.
680.
Yeah.
Perfect, thank you. Let's see here, we have, questions are coming in. Let's see here. How do the broker rates compare with your retail direct rates, it says?
I don't know. So I know we have a very small retail division, but our wholesale rates are supposed to be, and I don't know what their rates are, but our wholesale rates are lower.
All right, perfect.
Let's just
Let's see on this one. For refinances, what occupancy rate were you looking for again?
only one unit can be vacant in our refinance.
Can be vacant. Okay, perfect.
No matter how many units there are, only one can be vacant.
Perfect. Let's see here. Going back to the points, there's 3 points on the front, means nothing on the back, or thus 3 points total front and back?
So that's a great question, and we actually just changed our guidelines yesterday. We're looking, and I think it's just short term. Right now, it's just on the front. So our pricing right now is maxed at par for all new loans being submitted as of yesterday. That I don't know is going to be a long-term issue. That's something I think we're going to be working out with our secondary department. But right now, it's only on the front.
Okay, perfect. Only on the front. Let's see here. For expenses, do you use market expenses or actual?
We don't use expenses. So what happens is when figuring out the ratio on a DSCR loan, it's straight. We use 100% of the rental from either the lease or the rental analysis on the appraisal. We don't minus taxes. We just include PITI, principal interest taxes. If there's a homeowners association, which I doubt there is on a 5 to 10 unit, I've never seen one, and insurance. And then we just make sure that the rent covers it by 1.1%.
All right, perfect. Well, I'll tell you what, do you want to, let's save the rest of these questions towards the end, just so we can continue on. I know you have a bunch of market information to share, and we'll make sure that we come back to these. Does that sound like a plan?
Perfect. Sure.
Okay.
So where are these deals? So where I am, I live just, I'm originally from Boston. I live about 20 miles away now. And we have a lot of the, we call, multifamily properties, 5 to 10 units. I'm seeing a lot just in my pipeline. I'm seeing a lot in California. I'm seeing a lot in New York and New Jersey, and a lot in Massachusetts. But obviously this, and we're seeing in Dallas, Fort Worth, there's 60,000 of these in New York and Phoenix and Austin and Charlotte, New Jersey, Miami. I'm starting to see some in Atlanta, LA, and Houston. So these are metro areas. We don't see a lot in Ohio. We don't see a lot in Indiana. So when we talked about earlier, especially in the metro areas, we're seeing a larger loan sizes. We're seeing $1 million plus on every single loan. And as one of the people asked, you can charge up 3 points on a $1 million loan. That's maybe why we're seeing so many of them. And we talked about how to find these properties. And here's the 6-unit in LA that was up for sale when we made this slide for $2.35 million. So one of the things that we haven't talked about, and we'll talk about, I think, coming up slide is we'll go to 75% loan to value on a purchase. So at the 2.35 on this, we'll finance 75% of that purchase price. That's, I'm telling you, large loan sizes. And this is our LoopNet. So traditionally, credit unions and small town banks have had this product, and they're the only ones you can really go to because these are considered commercial loans, 5 to 10 units. So what's the difference between us and a small town bank, local bank that investors go to? So usually this program with local banks is a 5-1. So the difference is ours is a 30-year fixed, straight 30-year, or we'll also offer a 40-year interest only, where the first 10 years are interest only, and then it automatically switches to a 30-year amortization. So either or is available, but we don't offer any adjustable rate programs, straight 30-year fixed or 40-year IO. So Now the market might be dropping a little bit now on the rate. It's not always been that way. So when you have a 5-1 or a 7-1 with a local bank, that is a little different. That is, there's some uncertainty in the marketplace. If you go into a local bank, not only will they make sure the property debt services, but they're also going to ask for your tax returns for the last 2 years. They're going to ask for any other income you have from, W-2 or 1099 or anything like that. That when they ask for their tax returns, every real estate investor I know has depreciation. So all of a sudden they're losing, they have losses from the year or carry forward losses, and now they don't qualify. With us, we just qualify on the property, make sure the property debt service is at 1.1. The other thing about this, and it must have lower LTVs, but we're at 75 on a purchase, they might be at 65, even 60, as long as the debt service is plus your income. The other thing from this is, and from experience, I will tell you that on these commercial loans that these banks are doing, they usually have a call feature. So every year you have to qualify for this loan, or every 2 years. And then all of a sudden, the bank says, hey, we're low on cash. We need to shore up our books. We're calling all small balance commercial loans. Well, then you're out of luck. So you have to quickly scramble to refinance that. So we don't have a call feature on these loans unless you don't pay them. But we don't have a call feature on these loans like most small banks do. There's a big difference because you have uncertainty in the market. You have it's an adjustable rate mortgage. And they have a call feature. Every single one of them does. I've seen it. I've experienced it. I've been involved in it. So with us, we have the stability of a 30-year fixed or a 40-year IO. So that separates us from small banks when it comes to this product. So even higher LTVs, and we don't look at your tax returns. No, see, here we go. So on this product, we do 75% loan to value on the purchase, up to $2 million. 70% on a rate term refi, and 65% on a cash out. Those are loan sizes up to $2 million. We also go up to $3 million with a 5% LTV reduction to these percentages. 680 minimum FICO. It's a DSCR-only loan. Okay, that's everything I just talked about. 30-year fixed term or 40-year interest only, no balloon payment on these. 1 unit vacancy allowed. So I'll talk about this last. So we also accept on the appraisal, it's a common question, what appraisal do you use? We use a 71A, which is a Freddie Mac form, or we'll use a commercial narrative form. We do allow for appraisal transfers by exception only, and every single appraisal we have does get reviewed. Now let's go back up a second to the availability to finance broker fee or discount points into the loan. So 5% LTV reduction. So if you had a 70% purchase, you can actually add your broker fee into the loan and the rate stays exactly the same as it would at 70%. So now the LTV is technically 72.1. And then you add your fee into it up to 3 points. That 3 points can be used for 2 things in this situation. It can be used for your fee or a buy down of rate. So, or a combination thereof. So if you have a 70% loan to value on a purchase and you want to charge 2 points and then have another point for the rate buy down, you can add those 3 points into the loan amount. It's basically the borrower financing your fee. And that's how that works. We call it LTV stacking. A little different, it also separates us from the rest. Here's a real world thing that happened recently. It was a purchase for 2.1 million. Bank did 70% loan to value. We came in, the borrower went to a broker instead of going to the bank and says, what can you do for me? The broker shopped us and got a 75% LTV with a quicker close than the bank would. Because don't forget, the bank, while they want to see the debt service, they also want to see your tax returns, and they want to know everything about you. And this was clear close in 11 days. I personally had one recently where we were CTC in 9. It was a transferred appraisal. We had 5% LTV higher than the borrower was getting it someplace else. And it was a 1031 exchange, so we didn't get so much. He wanted to use all those funds for the property, the new property, and it was a slam dunk. And it was a great experience for the broker, the loan officer, as well as the borrower. So we can close these quick when we have to, and when it's in a situation like this. Broker benefits. So we expanded. So instead of 1.1 to 4 unit properties, we're expanding this to 5 to 10. So there's ability to finance more. 56.8 billion that was financed recently in this product. We say yes quicker than bank underwriting does. Sticky client base. This is a great, I love that word, sticky. It's a sticky client base because once you finance one commercial borrower, one 5 to 10 unit borrower, a lot of those people talk to each other. So they're in investment groups, they're in REI groups, they're in all these things, and like, oh, I just went through, XYZ mortgage, and they got me a rate in the low sevens on a 7-unit refinance. Holy smokes! Can you give me this broker's information? So we're seeing a lot of that. We're seeing a lot of referral business. We're not, the brokers are seeing this. So it's a great program. And it leads to when you're talking to realtors and you say, oh, I got this unbelievable, DSCR program where we don't ask for anything. We don't ask for tax returns. We don't ask for income. We don't ask for any of it on 5 to 10 units. Do you have anything that you might be listing for sale? I'll be glad to help finance it. So it's a great way to talk to realtors. This is actually a great line. Talk to your 2 to 4 unit owners. Are they ready to move up to the 5 to 10 unit program? Here is something that, that they can, economies of scale. So they can actually go into these 5 to 10 units when they have the experience from the 2 to 4 units. You jump into the next level under real estate investment. Target hotspots, Dallas, Fort Worth, New York City, Phoenix, Austin. I don't know what CLT is. That's a new one on me. New Jersey, Miami, Atlanta, LA, and Houston. We have a quick pricer, and I don't know if that's something you want to talk about, Tony. But we have, if you go onto our external website at ahlendtpo.com, over the right-hand side, there's, forget what it says, but underneath that it says quick pricer, and you can go in there. And if you want to price out a loan, we're seeing some of these price out in the low sevens at par. So it's a great program, and it's priced right. Any questions? If you go reach out to marketing at AHLend, they'll get it over to me or to Jackie. And here's our socials. Anything you want to talk about, Jackie?
No, just, we are a make sense lender. So we're going to look at each deal and make certain that, we've got mitigated risk and the loan makes sense. And it's a good investment for the borrower, for our broker, and of course for AHL. So we're happy to talk through any scenarios and offer some guidance or restructuring if it's something that doesn't work the way the borrower is exactly looking for it, but there's an option to make a loan work. We'll talk through that and certainly, attempt to restructure a loan with you. And we're happy to help anytime.
I do have a series of other questions as well that have come up as well. So I was going to see if this made a good opportunity to address those.
Sure, absolutely.
Now, some might have been asked, so I just want to make sure we cover all of those. Let's see, as far as fees go, what are your fees besides points that are charged?
We charge a $1,495 or $1,499, I think, underwriting fee, as well as a $450 appraisal review fee on this product.
$1,499 and $450?
Yes.
Thank you. Let's see. Oh, is there a minimum property purchase price allowed?
Minimum loan size is $250,000.
Thank you. Loan size, correct?
Mm-hmm.
Okay. Let's see. Let me scroll down here. Some have answered questions. I just wanted to double check. I followed up with their follow-up questions. Let's see. I believe we did address this, but just to make sure, because it is a pretty unique option and a feature that we have, and that's our stacking fee. And they wanted to know, do we have the stacking fee available from the 5 to 10, similar like we do on the 1 to 4?
Yes, we do.
I just want to make sure as well. Thank you. Also, is there a maximum number of properties that the borrower can own?
No. Now, they can own 100 properties. We don't mind. We are maxed on the amount we'll lend them. to 15 and 5 million. And again, if they're a great borrower, we'll look at making an exception to that as well. But right now it's 15 and 5 million.
Perfect. Okay, let's see. Are there any areas that we stay away from or hit leverage? For instance, Austin, Texas, certain areas of Florida, etc.
No, the only issue that we're having now is we're having an issue with Baltimore. Other than we love Florida, we love Houston, we love all those things, but we're right now out of the Baltimore market because of recent fraud.
Okay. Thank you so much. Let's see here. Going down here. Oh, just have a clarification if you don't mind. To clarify, we said before all units need to be rented on a purchase. And on a refi, you can do one empty unit. Is that correct?
No, what I said was on a purchase, they can all be vacant. None of them actually have to be occupied on a purchase. But on a refinance, rate term or cash out, only one unit can be vacant.
Okay, thank you. Let's see here. Can we close in the name of an LLC, and what is the review fee for that?
We call it $250, I think, a $250 entity review fee. You can close in the name of an LLC.
Thank you so much. Let's see here. Do you offer, let's see what this was. Do you offer rehab loans for 5 to 10 units at all?
No, they're not on our market. No, this is strictly market.
Okay, perfect. On this one, I think we're, let me see here. Do you ever consider to waive escrows?
On this product, yeah, it's because there's no change in the product for this one. So waiving escrows has several requirements. The LTV has to, well, doesn't matter on this one. It has to be below 80%, but minimum 720 credit score. And if it's a rate term refinance or a cash out refinance and we're paying back taxes, they don't qualify. Or back insurance, they don't qualify. But we will look at waiving escrows on that.
Okay, perfect. Okay, many questions. Let's see, we're coming down here. We're just asking again about exceptions you mentioned. So there's, do we make exceptions for borrowers with no prior DSCR ownership experience?
No, this is a next level investor. This is not a new investor. This is not a, hey, I recently watched the Home Network and I want to, buy a 10 unit. This is for someone that has experience. So, what happens when 3 hot water heaters go? What happens when the tenant from number 4 is getting in a fight with tenant from unit number 3? You know what I mean? We need landlord experience with these properties. This is next level investor. This is not a brand new investor.
Perfect. And I know we talked about loan amounts, but I just want to verify what the minimum and the maximum amount were.
$250,000 is for minimum. We'll go 75% up to 2 million, 70% on a rate term up to 2 million, and 65% cash out. We'll go to 3 million with a 5% LTV reduction.
Okay, that sounds great. Thank you. Let's see here. We do have a lot of people asking questions. They're really interested to hear more about the guidelines. I'd like to send those. I'm really interested. So someone that's listening, we will again make sure we share this presentation slide and the recording as well. Let's see here. Can we refinance 2 4 units on separate parcels?
No. Well, you can, absolutely, but not under this program. So if the parcels are separated, those are 4 unit properties. Same borrower might own both of them and they might be right next to each other, but that's a regular 1 to 4 unit DSCR. That's not an 8 unit DSCR because separate titles for each building.
Thank you so much. Let's see, did we already ask about prepay?
We do have, we have several options. So we have a 5 to 1 to 0. So there can be no prepay up to 5-year prepay. Prepay penalty is 5% of the outstanding balance. We do have a declining prepay on a 5-year. It is 54333. On a 3-year, it is 543.
Perfect. Let's see here. Okay, regarding experience, how many past DSCR loans do you need to see? For instance, will a 1 to 4 DSCR loan count as experience?
So it's not DSCR experience so much as an investment property experience, landlord experience. So we ask that the borrower owns the primary residence as well as 1 2+ unit property as an investment. And we ask that the owner for 12 months within the last 3 years.
Okay, perfect. They were asking, let me double check this. Are you able to stack at 76% LTV or only 70% LTV and below?
So on a purchase, so basically the stacking is 5% less than the max LTV of the program. So if we're max at 75% LTV on a purchase, we're max at 70% on stacking. So I can't stack at 76. I can only stack the max LTV would be 72.1, which is 3 points on a 70% loan to value.
Okay, let's see here. They were asking if we lend this product in Manhattan or boroughs.
Absolutely, all day long. I have about 7 of them right now in my pipeline.
Okay. Let's see any of these.
But I will tell you, let's back up a second. So we're seeing what we're seeing in some of the sections, some of the boroughs of New York. We're seeing units under 500 square feet. We can't lend on units under 500 square feet. So if there's 8 units and 7 of them are under 500 square feet, we can't look at that. Now let's go back to the exceptions. We will look at, say you have an 8 unit and one unit has 490 square feet. We'll look at that on an exception basis, but we won't look at any more than 1 unit under 500 square feet.
Okay, and this I just need to verify. I don't know if it could have been a typo and my error. Just want to make sure we're verifying the appraisal cost on that.
So it depends. So depends on the location, depends on how many comps, depends on the thing. We don't charge for that. We have, I think, 15 of our 35 approved AMCs that we have on our list for these programs, and we're seeing an average appraisal cost between $2,500 and $4,500.
Okay, that makes sense because I obviously put in the wrong information. I had $499 written in here at one point, and they were obviously questioning. I was like, that doesn't look proper. So that's my error. So I apologize on that. So thank you for clarifying that. Real quick.
The next question, usually after that question, just from experience, next question is, when do you need 2 appraisals? We need 2 appraisals when the loan amount's over $2 million. When it's under $2 million, 1 appraisal is good with us.
Okay. Here. Do you finance a vacancy or reduce the loan amount if vacancy exists?
Well, no, we go back to the vacancy factor. On the vacancy on a purchase, we go by what the rental schedule is on the appraisal. On a refinance, we can only have 1 unit vacant, and that unit is then because there's no lease and no tenant in, we'll take the rental schedule from the appraisal on that one, but use the leases on the other occupied units.
Okay. And do we use an IP payment for the DSCR factor?
Yes, we do. IO payment.
IO payment? Okay.
Yeah, qualifying installment payment on the DSCR factor.
Okay. Let's see here. That's what they're asking. Yes, it's the IO payment. Okay, perfect. Let's see here.
I know when people make mistakes typing.
Well, it doesn't help that I put in time as well, so I own that myself. So yes, that's on here. Okay, let's see this. Regarding items that might get called out on an appraisal, are there differences between an SFR appraisal and a commercial appraisal?
Very much so. So the one is just a straight form on the single family residence, straight form. 71A is a completely different form, or commercial narrative. Commercial narrative could be 50, 60, 75 pages long. So the big difference between it and the big difference between the costs because it's more extensive.
Okay, perfect. Let's see. Typical appraisal on a 5 to 10 unit question mark says here 1,500 to 2,000.
We're seeing 1,500 to, up to the ones that I'm seeing lately are around the $3,000 and $3,500 range.
Just also keep in mind that the timeline on these appraisals is, we're seeing typically 4 to 8 weeks for the appraisal to be accomplished.
Okay, perfect.
And on the appraisals, our brokers choose which AMC they want to use. So we have a list of all approved 5 to 10 unit AMCs that are approved with us. But through our appraisal ordering software in our portal, you get to decide which AMC you want to use.
Okay. I don't remember if we asked about the standard prepay.
I'll go back. I'll re-answer every question. No, I'll be glad to help any way I can. So the standard prepay is 5%, but we offer 5-year, 4-year, 3-year, 2-year, 1-year, and no prepay. Prepay is 5% of the unpaid balance. If it's a declining prepay, it's a little bit higher in cost, but it's 5-4-3-3-3. On a 3-year, it's 5-4-3.
Okay. Let's see here. It says these DSCRs are not underwritten with CAPR rates, management vacancies, and so forth, correct?
Correct.
Thank you. Well, we're getting down there. Let's see here. Clarity, though, real quickly on how a client may pick their AMC, at least in the AHL dashboard. How's that work?
In the AHL dashboard, we have a list of all approved AMCs for this because we have like 35, I think, approved AMCs. Before we rolled this product out, we reached out to every AMC about this, what we needed, the 71A, or more currently, the commercial narrative. And then they got back to us on the ones that were able to do these types of appraisals are the ones that are on our approved list. So it'd be going to quite depth, but a broker approved can go into the portal, order through our appraisal software, and pick which AMC they want.
Perfect. Let's see this one. Any mixed use properties allowed in this program?
No, it's residential only, 5 to 10 units. We don't have any commercial aspects allowable on the product.
Okay. There's another question, same thing, asking, for instance, if retail is on the first floor allowed and so forth.
No, residential only.
Okay. Let's see here. Do we have any? I don't think I have any that I show that. Oh, no, I take it back. Let me go through here. A couple that just come through. So it's going to say for those who I might not have addressed your question, feel free to ask it again. Let's see here. I don't know if we addressed this, but state the question. Are there any states where it's required to close in an LLC?
No, we don't require it. That's up to the borrower to decide where they want it. We don't require that any state to close in an LLC.
Thank you. Let's see, any others? Are our detailed guidelines posted on the website? And do we have a pricer? I know you addressed the pricer question that so we have that tool on our website. What regarding the guidelines?
I don't go onto the guideline. I don't go onto that website very often, so I don't know if the guidelines are the matrices. Did you post the matrices on our AHL TPO website? Yeah, so yeah, the guidelines are there as well as the pricer.
Okay.
Now, I will tell you some of the hangups on pricing these loans. You have to put in it's very easy to price these loans, but you have to put in an own DSCR 1.1. You're not going to get any pricing at 1.0. You have to put in the zip code. You have to put in a couple other things. And when over the right-hand side on the bottom, it's going to say property type. You have to put SFD. Once you put SFD, the next one says how many units, and then 1 to 10 will pop up. and make sure it's the 5 to 10. And then make sure you click that right underneath that, you click investment, and then you'll get your pricing. So then like 5 lines are going to show up. 4 of them are going to be gray, 1 of them is going to be green. When you see the green line, click on the green line, and that's where you get your pricing. And it's 45-day locks.
Okay. Let's see here. Do we have any other? How long we're asking us how long do they need to have it owned their 2+ unit to meet the experience requirement?
We have it at, our guidelines are 12 months, owned it for 12 months within the last 36 months.
12 months ownership within the last 36 months. Is that correct?
Correct.
Let's see this.
And if you have one, 11 months, send it in.
Here is one specific, says North Carolina is a due diligence state where contract deposits are lost if not closed. Can the borrower green card holder be vetted before client goes shopping?
So we can surely underwrite the borrower. You know, the biggest difference is the property is really something, you know, that needs to be underwritten. So if we don't have a property address yet, we can tell you that the borrower appears to qualify, but you know, the overall approval is going to be predicated on the property and of course the rental information on the property.
And exactly, and I will chime in on that. Say you need an exception on you're an approved broker and you submit a scenario to me and you need an exception before the borrower will put the offer in. If you supply everything to us and you know what the potential LTV is, what the borrower's credit score is right now, you supply a 1003, you get everything over to us that we need, we can ask for an exception prior to submission. But that's just on the citizenship. That's not on the property or the property carrying itself or anything like that.
We asked for the pricing tool again on the website. So that website is www.ahlendtpo.com, and you'll find that right on that homepage. It links under the resources and so forth. There's that pricing tool. Let's see here. They have a question on the calculation. It says confirming DSCR is calculated by the following formula: rental income divided by PITIA. Is that correct?
Yes.
Okay, that is correct. Let's see here. One was a clarification just as well. Just to clarify, you don't use the lower of the lease or market rents.
No, we do. I mean, we will use if there's a lease in place, we will use the value of the lease. If there is not a lease in place, in the case of a purchase money loan, then we'll use the rents as noted on the appraisal. On a refinance, if there's one vacant unit, we will use the rent that's noted on the appraisal and the lease value on the other units.
Okay, perfect. Let me see this. Yes, we said citizens or residents only. That's correct. Do we pull a tri-merge credit and do you use the middle score or the higher?
No, so we don't pull the credit, the broker pulls the credit. Unless it's a commercial broker and we do that for them. But if it's a regular broker, you pull the credit and then you assign that report to us. We use the middle of 3, scores lower of 2, if only 2 are available, which you never see in this product. But we use the middle of the 3.
Perfect. That's exactly what, okay. Let's see here. Let's see. I apologize. Some of these were coming in either duplicates or late, or was showing for some reason it just logs that we've answered this question when we might not have. So I'm just looking at all questions that have been answered or not. Yes, the system seems to think we've answered some of these. Let's see. Are rates locked up front or only at a certain point, like maybe after the appraisal comes back? Can you explain more details?
So the rate lock, we have a rate lock on these programs for 45 days. You can lock at registration, you can lock at submission, you can lock anytime you want. You can lock, it's straight 45 days. If you want to float right up until CTC and lock it, you're locking it for 45 days. It's a one time, you only have one period for lock. We do allow for a one-time 15-day extension for 15 basis points to pricing. And it's a very straightforward, and that's on all of our programs. You can lock a rate today and not submit the loan until next week. So it's a very aggressive, and we joke around 45, same as 30. So our 45-day pricing is the same as a lot of other companies, 30 days, and you have an additional 2 weeks of protection.
Okay. A question regarding ownership on an LLC. If a property is owned by an LLC, do all members of the LLC need to be on the loan?
I'll let you answer that one, Jackie.
So they do not need to be on the loan. So we do need a member that owns at least 25% of the entity as the borrower. We do require 51% entity ownership to be a personal guarantor. The personal guarantors are required to complete kind of a mini application and authorize us to run a background check and to pull credit. And that's just in an effort to make certain we're not dealing with any bad actors in that regard.
Okay, perfect. Let's see these. I think I'm going by the time that these have been asked as well. So for anyone's on here that I have not asked, feel free to ask again. Let me see here. You said U.S. citizen or resident only, that's correct. I think that's it for the questions. I'm checking the time when they're coming in as well. We had a couple people ask to specify if they have a rep with us. So what we'll do is, if you have an account executive assigned to you or not, what we'll do is I'll let you know my personal task right after this is I'm going to go through our system to see who your account executive is. If you're not aware of it, if you don't have somebody, we'll make sure that we have somebody assigned to you for some sort of instant follow-ups to answer questions. Obviously, as you can see, it's hard for me to type a lot of these detailed responses in a short paragraph in which this allows me. So we'll make sure that we have that account executive reach out to you for these questions you have. All these questions that have been asked are shared with all of our account executives so that when they call each of you back or if you reach out to them, they'll better have a better idea rather of what the conversation was and how they can ask these questions. So if I've missed these, like I said, yes, we'll make sure that you have an account executive assigned to you. We'll let you know who that is as well. Let's see here. One question that came in is, do these properties require an environmental phase 1 report since they are commercial? Or is this
No, we don't require we call them 21E reports. We don't require those.
Thank you.
Plus, they also have no commercial aspects, even though they're considered commercial loans, and they have no commercial aspects of the building. It's residential only. So we're not worried about a dry cleaner or a garage or anything like that ruining the soil.
Okay, that makes sense. Thank you. Okay, let me see here. What was we're asking for clarification on permanent residents. Let's see here, if we make exceptions and so forth. Apologies for that question. It does need to be answered. They're asking about is permanent resident, it said it is an exception?
Yeah, so I'm sorry, go ahead.
Our program allows for U.S. citizens, and we will look at permanent residents as an exception.
Okay. And do you any sort of specifics on what those exceptions are they're just saying, or is it what factors?
So we want to close make sense loans. So does this borrower qualify for every other reason? Beside that, is the borrower have strong reserves, strong depth of credit? The thing that we get nervous about with permanent residents is depth of credit. Have they owned their primary for a long time? Have they, they have good mortgage history? They have good ability to carry debt. So that's one of the big things. They have good reserves. You know, is the LTV a strong LTV on the program? We want to close make sense loans, and it has to make sense.
Okay, thank you. Let's see here. They're asking about why exception. I think you just were just speaking to that. Yes, Sarah, it's definitely going to be a recording for this. You'll receive an email that has a recording. Just give it maybe an hour. It takes this website to just make sure it records it properly, and then an email will be sent out with a copy of the recording as well. And also the questions, all the questions and answers that we mentioned that I wasn't able to provide in this small section where I could give a response. I think that's it. I believe we've answered all the other questions. It shows we've answered them. So again, one last thing for those that are on here, we did want to note, this is a perfect segue to mention that next Wednesday, we are having a live scenario website. So you're able to register for that. We'll make sure we include this invitation to you all as well. It's new for us. We're going to have Jackie on here, maybe Dan as well, Jamie, a few others. We'll be going through some live scenarios. So when you register, you have the option to give your scenario up front. We can do some of our due diligence and check into it and answer it really quickly in advance, as well as on that. However, if you don't have a live scenario, we also encourage you to join us. It's a great learning opportunity. It's going to cover all of our loan programs for this non-QM. So it's kind of like a lunch and learn, as well as kind of see some real life scenarios and how we here at American Heritage Lending can kind of, price out some of these unique scenarios. Look at this discussion we just had on a 5 to 10. So you can imagine what you're going to learn on all of our other loan programs. So we'll make sure that you have that invitation. Strongly encourage, if you can't attend, by all means, we'll make sure you have a recording to that as well, because it really is a great opportunity to kind of learn what this industry offers and how we might be able to help you in a niche way. So it's going to be new for us. So we'd love to have you guys out there. If you have a scenario or not, like I said, it's a learning opportunity as well. It might be for us. It's going to be a great opportunity for us to hear what you guys need and what the market needs and what our clients need. And maybe we have to, look at our guidelines or our exceptions. So it's going to be a learning experience for both of us. So we would love to have you all attend. I think that's it. Yeah, I think that's the last of the questions we had for now. So any last words, Jackie or Dan?
Yeah, thank you for joining us. Clearly, there's some really great opportunity in this 5 to 10 unit product. Dan is the master of these products, certainly, and all of our account executives are very well trained, and we're happy to help any way we can.
All right. Dan, any last words?
No, I'm not going to say anything better than that. So thank you for having us.
All right, you all take care. Everyone have a great day, and hopefully we'll see you this time next week.
Thank you, Tony.
Thank you, Tony.